Let's bring in BMO Managing Director and Senior Analyst Simeon Siegel, who authored that note, Simeon. And I know you want to take a victory lap here because you called this, you've been very negative on the stock for a while. My question is it more complicated than just the pandemic is dissipating and people want to go out and work out in gyms?
Hey, Sarah, good to be here. So you're making me sound like the Grinch here. I'm not rooting for anyone to fail. So just to be clear on that, it was more of, I think when we look at this opportunity, we looked at how big the company was. There was just a mismatch on the fundamentals. So the conversations that you and I generally have, I think, listen, at the end of the day, Peloton took advantage of COVID in a beautiful way, capitalized, pulled forward demand and got there. But I think the danger was reading through that demand and envisioning that that was going to be the sustainable trend. And I think right now, what might be more complicated is the simplistic way of thinking about it is this is the reverse COVID trade when COVID winners start becoming the problem on the other side. But I think there's an even bigger question of trying to figure out, did they just lay down a tremendous amount of fixed cost? Did they create a business that was predicated on driving that level of demand and all of a sudden find that that demand is now faltered?
So how do the economics change from here with their lowered guidance, increased costs, and the fact that they're cutting prices?
I think you said it right. Like at the end of the day, if we're going to have lower demand and now the costs are much higher, it feels like the cost to run this business is structurally higher. The gross margin's lower. We're cutting price on goods. The cost of acquisition is higher. And there's now an incredible amount of competition. You and I have talked about the growing landscape across connected fitness. There's a lot of really interesting companies out there. You hear about Hydro, Tonal, Climate, like there are all these different options now, a way to work out in the living room. So I think that what we're going to see is this growth of the sector at large, but it's not going to be a winner-take-all mentality. And I think that what we find is the economics now are a lot worse than they looked last year when you didn't have to promote. It's like at the end of the day, right? We talk about consumer brands all the time. When a company does not have competition, they don't have to market and they don't have to promote. When they do, they do. And there's this really weird irony or this mirror image where every conversation going on right now is about supply chain constraints and inflation. Peloton has a massive inventory build and they're cutting price. It's like there's bizarro reverse retail scenario. And then another interesting thing was this idea of equipment sales. So now they bought Precor and calling out equipment sales as being a little bit lighter on the same day that Planet Fitness talks about equipment sales being the best we've seen in a while. So there's this interesting dynamic where you had this position of strength last year, now coming not necessarily a position of weakness, but a recalibration of expectations. And then what we're seeing is it's a very expensive business to run.
So, Simeon, gauge for us the scale of the issue they face. I mean, clearly they were a pandemic winner. Was the pandemic the only reason they were ever a winner?
So listen, I think this is going to be something that's probably a crazy comment that I'm sure I'll get backlash on, but I wonder if the pandemic actually was good for Peloton, because I think Peloton as a product, and you guys know I love the bike, you know, I've said it enough times, I think they were doing a beautiful job growing as a startup. And I think what the pandemic did was it propelled them onto the stage of mega cap. So all of a sudden you went from startup to the largest, and you didn't really get there. And that's where we saw these growing pains of all the issues with infrastructure, of delays, of complaints with customers, of the recall, things that you normally would learn as you become this much larger brand. But I think the problem is if you overlay that on this idea that because you had this massive demand, the company spent a lot to build a much bigger business. That's where you start asking questions. Was this actually a good thing for them or not? So, Wilf, to your point, great product, building a really nice company. Absent the pandemic, we'd all probably be talking about this really impressive startup that might be deciding to go public, something, you know, like that, this type of an idea. But at the end of the day, they just became something so much larger. And I think that may have been, whether it was that landscape that pushed them to invest or not, what we're seeing now is dwindling cash and growing inventory. That's a tough proposition if demand is slowing.